Hello and welcome to Quilter Cheviot's Markets Uncut podcast, your weekly insight into the topics and trends that we have been exploring for you here at Quilter Cheviot. Remember, so you don't miss future episodes, be sure to hit the follow button on whichever streaming platform you are listening on, or by following #weeklycomment on LinkedIn. I'm your host this week, Harry Gibbon, investment manager based out of our London office. And this week I am pleased to be joined by Richard Carter, our head of fixed interest research, and Carly Moorhouse, fund research analyst. Good morning to you both. We had a busy week last week with a Wednesday Fed meeting, local elections here in the UK on Thursday, and the eagerly watched US non-farm payrolls on Friday. With lots to cover, let's kick off with you, Richard. Could you take us through the current US interest rate expectations? Typically in a week of Fed meeting, expectation can be quite volatile.
Well, they certainly can be, and last week was no different. And not just the Fed meeting, but as you say, you had non-farm payrolls as well, and we had lots of different data out. So they were jumping around all over the place, and you've had this narrative for the past few weeks about higher for longer and very strong economy and sticky inflation in the US. So bond markets have been under a bit of pressure. But last week they did get a little bit of relief. Yields were down, and that helped equity markets as well. And I think the main things really, the Fed, I don't think the meeting or anything that Powell did was much of a surprise, but he sort of, he calmed things down a little bit and said, listen, we are hoping, basically at some point to get to rate cuts. We just can't do it yet. But in terms of that, they are, rate cuts still are on the agenda at some point, hopefully. But the other thing that's been causing a few issues has been the strength of the US labor market data and very low unemployment rate, high wages as well. And that changed slightly last week. And actually, there's been a few leading indicators suggesting that the jobs market might be slowing. And we had the couple of reports, job openings report, which looks at sort of vacancies in the economy. They were down. And then, of course, the big one, non-farm payrolls, was also weaker than expected. And you saw a rise in the unemployment rate and slower wage growth, which basically, three green lights for markets, basically, on Friday afternoon with that report. So, yeah, Fed expectations, now at one point, I think, pricing in one cut the rest of the year, now pricing in almost two. Not far off two, and first cut expected to be around September maybe. So these do change a lot, but who knows? Next week it'll probably be the same thing.
Interesting, and there are a lot of commentators, or a couple of commentators, talking about the Fed actually hiking rates as opposed to keeping them at this rate for longer. With those green lights, those sort of green flags you were just talking about there, Richard, do you think those hawks tune would have changed, or do you think there's still rumblings that rates could go up from here?
I think Powell sort of said, next move is unlikely to be up or anything like that, and obviously, you've got to take the Fed at its word sometimes, and so those sorts of worries ease, but until they actually start cutting rates, and until you see inflation, come down further, there's always a danger. It doesn't seem very likely they will be hiking, but there's always a risk. And it's true, we've had this period of high interest rates, and everyone was sort of thinking, well, this will slow the economy, it will cause problems for various companies and everything like that. And it just, so far, it hasn't happened. The economies have been very, very resilient. There is this sort of worry that if Trump wins the election in November, starts cutting taxes, he could reignite the US economy even more than it kind of already is at the moment, and that might potentially lead hikes into play. But hopefully we won't get to that stage, and the next move in rates will be down.
Yes, we're all keeping our eye on that November election. It'll be interesting to see how it goes. But moving over to the UK from the US, we also saw UK base rate expectations moving up with US rate expectations. Could you quickly talk about how the two are related and how the US interest rate expectations are linked to the UK and other expectations?
Yeah, it's a good one. I mean, in some ways, you should look at Bank of England and the ECB in isolation from the Fed, but inevitably, markets, particularly bond markets, are very correlated. And arguably, if the economy is doing well in the US and inflation's sticky, you might have the same problem here in Europe generally. Certainly, big picture anyway. But there are some differences between certainly the causes of inflation in the UK, causes of inflation in the Eurozone, and the state of GDP growth, has certainly been a lot weaker in the UK and Europe than it has been in the US. So although you do tend to see a big correlation with the rate expectations, central bank talk recently has slightly differed. I mean, certainly ECB is saying, most people on these, people have been talking from the ECB that rates will be coming down in June. So there has been a little bit of change. That's slightly different to the Fed. Bank of England caught somewhere in the middle, I would say, between the ECB and the Fed. But I think this week with the Bank of England meeting coming on, they might be prepared to go a little bit further than they have been before and saying, listen, cuts are coming. The economy, is ready for them. Inflation's come down far enough. And so maybe they will be moving ahead of the Fed and the Fed. But as you say, overall, these things can be quite correlated.
Yeah, interesting. And looking over at maybe on the politics side, we had some local elections last week on Thursday, as I mentioned. It was a bit of a Labour cause for celebration, given the amount of councillors that they managed to nab from the Conservatives. Do you think the general election is going to be going the same way, or could it be savoured by Rishi Sunak's party?
It's very difficult. I mean, I saw some analysis that the polls suggesting could be a hung parliament. We'll have to wait and see. I think the sort of things going on in Scotland and the problems that the SNP are having could well lead to Labour picking up more seats there. I mean, local elections, because of their nature, quite parochial nature, and sometimes in some of the issues aren't always the best read across for a general election. But as things stand, I mean, I'd be amazed if Labour don't go and win it and win a sort of, if not an outright majority close enough to form the next government. And I think all the sort of stuff that Sunak's coming out with, for me, is it really going to move the polls enough in their favour? It seems highly unlikely to me. But election could be another 6 months away, so we'll have to wait and see.
Yeah, I saw Rishi talking about the hung parliament, and I think that he's definitely going to hang his hat on that one. Thank you there, Richard. That was really interesting. Now, one of the advantages of having a large dedicated research team at Quilter Cheviot is that our analysts have the ability to visit their specialist regions to talk to fund managers face to face. Valuable insights are gained on these trips, and we have the opportunity now to talk to Carly, who has just returned from the US. Carly, thank you for joining us. Tell us a bit about what you did over there.
Sure. So we were there for just over a week, going from Florida to Austin, with a few days in New York, Toronto, Chicago, and Houston in between. So we definitely were meeting managers from all over the US, which is great. And we hopefully got a more representative view of sentiment over there as well. It was a really fascinating trip, not least due to the number of extremely interesting managers we met with, some that I'd never heard of before, that are certainly much less well known over here. We also met with some that don't currently have UCITS, but are thinking of launching soon. So very exciting from that point of view, at least with regards to potential new investment opportunities. But then we also went out with a few broad topics that we wanted to touch upon with managers, particularly around their wider view on the US economy, what they were seeing and hearing when talking to companies, that sort of thing. So where we could, we were just trying to get that sort of information as well.
And so in your discussions with the managers, they typically invest along differing themes throughout the years and that they're investing. Were there any new themes that they were talking about, other than, of course, artificial intelligence, but or any specific areas of interest that came out of the trip?
Yeah, so we obviously discussed things like AI, but also discussed, the Magnificent Seven at length, maybe more Magnificent Six today. As we were over there, it was results season, so we were seeing some big moves, which added to the conversations that we were having. I wouldn't say that the views on those stocks were particularly differentiated from what we hear from the managers that we usually speak to. But if you do look back at history, I think the US market has gone through a few periods of large concentration near the top, but those leaders do change. So the view is, while of course these are great companies with great products, the valuations of some may not necessarily support that going into the future. And actually, if you look back to the tech bubble, after that period where names like Cisco fell significantly afterwards, it was actually a pretty good period for active management. So that was pretty interesting. I think another area was, of course, at the other end of the spectrum. So, small and mid caps in the US is undeniably cheap relative to the larger mega caps, but also relative to history. So, of course, the fact that it looks to be good value came up a lot. But then also the fact that in these areas you do get more access to domestically focused companies. More of those are involved in things like the Inflation Reduction Act and Build Back Better Act, alongside the Infrastructure Investment and Jobs Act. And we did see a lot of infrastructure build and renovation while we were there, particularly with regards to buildings and roads. So I think that's another element of small and mid caps in the US, which are quite attractive. And then finally, active ETFs is also something that we spoke about a lot. There is huge demand for them in the US already, but not so much over here. I think one of the reasons they're so popular in the US, though, is because of tax reasons. They're more favorable there, but then also you get flexibility in terms of trading. So you can obviously buy and sell throughout the day, providing liquidity, but then you can also take advantage of real-time news and opportunities, that sort of thing. And you may have seen that Cathie Wood's ARK Invest is launching 3 active ETFs in Europe soon, including its flagship ARK Innovation ETF. So I think that's certainly an area to watch.
Yeah, it sounds like you've really built up the pipeline of funds to invest in there. Really interesting. You mentioned the Inflation Reduction Act, and I thought I'd just ask you quickly about ESG, because it's becoming a really polarized theme in the US of late. And certainly the Republicans have jumped on the Inflation Reduction Act as much as they can. Did any of that come through in your discussions, how there's that polarization?
Yeah, it was something that we touched upon in most of our meetings. I think it's quite difficult for a lot of managers as their US-based clients tend to have very different views, usually off the back of where they're based. So it really is a bit of a balance. Many are, of course, still integrating ESG into their process, predominantly from a risk management point of view. But where it is something that we see in every presentation here, there's always a slide on ESG. It's always brought up in meetings. That wasn't necessarily the case there. Again, not because they're not doing it, but because not all prospective clients want to see it.
Yeah, I imagine it's really difficult for them. They've got to decide which side they're on, and either way can make them lose or gain investors. It's very difficult. So lastly, from being on the ground, did you hear anything on the macro side of things, whether around election in November or interest rate cuts coming up at the end of the year?
I'd say that generally most managers were reluctant to give much of a view. So, on the one hand, the majority of the managers that we spoke with, they are bottom-up stock pickers, focusing less on top-down views. So it is somewhat understandable. But overall, even with regards to the type of things that companies are saying, the views were fairly mixed. I don't think any managers were banging the table either way. And I'm not sure, again, if that was due to a reluctance to take a strong position or whether they simply don't have that strong a view. We've gone from 6 rate cuts to 1, maybe 2 in not a huge space of time. And as Richard said just now, we've seen the data jumping around quite a lot. So maybe that explains why some people we spoke to were a bit more wary to take a view. However, one thing that did come out, and we've seen it reiterated in certain companies reporting, is that while the wealthier consumer seems to be doing okay, there is perhaps a slowing at the lower end. However, it doesn't seem like it's anything too concerning. But in a similar way to our conversations about things like inflation and the potential for a recession, elections were also loosely discussed, and it seemed to me like there wasn't any clear winner, which I found interesting because the last time I went to the US was actually right before the 2016 election. And sitting in the UK, I know I certainly thought Trump becoming president was unlikely. However, it became very obvious to me during conversations with Americans during that trip that Trump was the favorite. But that's definitely not the case this time, as I would say it feels a bit more level between the two candidates. But what struck me as particularly interesting was how no one seemed to be positioning either way, and the majority thought that it didn't hugely matter for markets who won the election, as over history markets hadn't been impacted significantly, positively or negatively, over the tenure of either a Democratic or Republican president. Additionally, I guess it's unlikely you'll see a rollback in areas like infrastructure spend. That's expected to continue regardless, as it's beneficial domestically, as we spoke about before. I think while it's always quite noisy in the healthcare space during an election year, you have two known entities. There's no kind of Bernie Sanders type candidate here. So, again, either candidate shouldn't cause too much of a stir. I guess, there were a few sectors that did well initially when Trump was elected, like financials. So, we could perhaps see that again should he win.
That's really interesting. Thank you so much, Carly. As I said, valuable insights gained from boots on the ground research. So for the advisors listening this week, we're running a series of 3 due diligence webinars on the 14th, 15th, and 16th of May. The first will be on DFM due diligence, the second on MPS due diligence, and the third is about responsible investment and the obligation of advisors when it comes to SDR. These will be around 40 minutes long each and will feature panelists from ARC, AKG, and the Langcat sharing their expertise. You can find the registration link on our website or by emailing inquiries@quiltercheviot.com. If you enjoyed our discussion on the podcast today, we would love to hear from you. So please review the show now, wherever you're listening, and share it on your socials, tagging us @quiltercheviot. To make sure you don't miss a future episode, tap the subscription button. We'll be back next week. In the meantime, head over to our website, www.quiltercheviot.com, where you can read the accompanying market overview, as well as subscribe to our weekly comment newsletter. You can also stay up to date with our thoughts on market news, industry insights, and our upcoming events and webinars on our website or on our social media pages. Finally, if you have any questions you'd like to ask one of our experts on our next podcast, simply ask them via the weekly comments page on our website. We love to hear your questions. And that's it for today. So thank you, Richard and Carly, for your time, and all of you for listening. See you next time.